Hey folks, welcome to the day trading, swing trading market wrap for July 10th, 2007. Well, what we're going to talk about today first is the dramatic move down in the markets. And I don't want to toot my horn too much here, but InTheMoneyStocks.com and myself, which is one and the same, we pretty much called this yesterday. And I didn't expect necessarily to call it this accurately, but we saw the first dramatic decline today in a while, a couple weeks anyways. And yesterday, those of you guys that watched the video saw that I discussed this, and I said we have major negative divergences in the market, and something's going to happen. And I said this yesterday in the video, so those of you that watched the video could obviously go and check it out, and those of you guys that didn't can just go on InTheMoneyStocks.com under day trading vids and stuff and archives and look the video up, or go on YouTube. But what was so dramatic about this was that, we had light volume from basically before July 4th, because the holiday leading up to the holiday, so that Monday and Tuesday of last week. Then we had July 4th Wednesday, Thursday, Friday, again was light volume. Yesterday we had a hangover with light volume, and today was the first day back with good volume, and what did we do? Got smacked down, alright? And this is key here, guys. This is exactly what we've been discussing at InTheMoneyStocks.com, and why you all need to be on board with us as far as I'm concerned, because we set this up perfectly with our swing trade alerts. Those of you guys that have swing trade alerts know that we got triggered on two of our swing trade alerts, one last week and one on Monday of this week, and they were both short funds. And I'm not going to go into any more details than that, but we got triggered on these short funds. We got in just nicely on Monday for the last one, and bam, what happened today? The market got slammed down. So these short funds we went long on, which means that when the market drops, these short funds move up dramatically. 2 times, believe it or not. So you guys, some of you guys that know ETFs can probably figure out which ones. What a move today, guys. What a move. And this is going to continue. This isn't done, folks. There are major issues showing up on the technicals. And you guys know, InTheMoneyStocks.com, we read technicals first of all. Alright? We abide by technicals. The technicals will tell you what the future holds because of the setups, okay? So again, what we're saying here is that this is the start. This is exactly what we talked about yesterday and told you all to watch out for. I hope you all paid attention. I really do, because I hate when people get hit when they don't need to be hit. And those of you guys that listened to the technical readouts yesterday on the videos would know that today was the exact thing that we were talking about. And it wasn't it was a down day, a pretty dramatic down day. You had the Dow down 150, the Nasdaq down 30. But I want to make sure everyone's clear. It's not like a lot of people are going to say, well, now we're going to move right back up, just like we did the last few times. And I'm here to say, folks, it's not that easy, okay? There are major underlying currents in this market, and we're seeing it in the technicals, and I'm just trying to explain what the technicals are showing through the fundamentals of the market, which are oil at 73, you got rates over 5%. The Fed can't lower rates, folks, because it's going to cause inflation and cause a major crunch in the dollar. The dollar's already so weak. If they lower rates, the dollar's going to collapse. And if they raise rates, then guess what happens? All these lending and mortgage problems get even worse because rates rising cause issues in the subprime and in the prime market. So the Fed is screwed here, guys. I hate to break it to you, but the Fed can't do anything. And the real thing they should do is really raise rates, because in the long term that would be healthier for the market, even though it would cause major issues now. We'd probably have a crash right now if they raise rates. But what they're probably going to do is just stand pat, and they're just going to sit by and say, hey, let the market do what it's got to do. And unfortunately, it's going to make it the decline not so dramatic, but it's going to just take a longer time frame. Alright, folks, and that's what's going to happen here. And this is I hope you guys are all checking out this ES chart today, the E-minis chart, because look, you can see we started out just going kind of down pre-market. We got a little bounce, and then we really rolled over around 1 o'clock, and we just sold. We got a little bounce here, sold again hard, closed right at the lows, which is a negative indicator. And not much to say other than that, but I really hope you guys are paying attention here when we talk about these negative divergences, because these things are actual negative divergences on technical indicators. We're not making these up. We don't pull them out of the air or anywhere else. These are official indicators that we watch. And today we knew the wave patterns and how low the market would go by reading the Elliott wave patterns of 1, 2, 3, 4, and 5 move down, all right? And it's possible we haven't seen the 5th move down yet, so we might see a push up tomorrow and then one more sell before we kind of get in a consolidation period, all right? It's very possible we either consolidate tomorrow or we will have another move down. I don't see us bouncing right back up tomorrow at all. And I want to make this clear, on a longer time frame, looking at a week or two, I think we're going to go lower. And I want to just show here the chart. You see this, guys? You see this right here, the support level? It's hit twice. This is 1490 area. This has been support the last 2 times it's come down here, even 3 if you talk about this one right here. Alright, folks, either the next time or the following time, we might come down, bounce off this number again, but then the next time we will break. And I'm going to go out on a limb here, guys, and it's very rare I'll stick my neck out like this, but I'm telling you guys we will break in the next week or two this 1490 level, and guess where the next spot is? 1460, right down here. Alright, so I'm telling you guys this right now. A lot of you guys, you know, please use it as best as you can, alright? Don't go crazy. I always preach conservative, and don't go out on a limb too much, because you always want to be hedged both directions. But this is what it's looking like. This is what we're setting up for, and please be aware of that. Alright, so that's the ES chart. Let's look at the NASDAQ. The NASDAQ really has a lot. It has just to go down to the 20. Here, it has another fall. Alright, the NASDAQ's been the stronger of the indexes, alright? And one thing I want to point out before we get to this, what's been telling us, what's been a leading indicator have we talked about over the past videos? What indicators of stocks have told us where the market was going to go? The answer to that is financials. And you can see, look at how weak this Goldman chart is, guys. And look at the fall today, $6 in Goldman. Alright, that's a big move in Goldman, even for Goldman. And you can see how this is angling down here. That's showing us that compared to the market, which is, let's look at the CompX here. Alright, the CompX looks like this. Alright, you see how it's angled up? Well, Goldman has been angled down, and Goldman is a leading indicator, so you all need to understand how we're reading the markets here, and understand exactly how we know these leading indicator stocks work. All right. So the key is watch these, like let's see, Bear Stearns, BSC down $6. You're talking about all these financials getting crushed. Look at this angle here, guys, on this chart. All right. These have been leading stocks for the past 2 years. They're not going to stop now. So when they get weak, it's another indicator that we're using to tell that the market is going to get weak, guys. And we're not expecting. I mean, this is as weak as you can get. How ugly is this chart? You know, you're talking about a month or 2 ago we hit a high, and ever since then we've been trailing down. So the market needs to catch up, and that's the point here. All right, folks. So be aware. Again, let's look at the NASDAQ chart. This is the first fall today here, and look at this light volume move up. That's how also we knew, guys. Light volume moves up are such BS, and please understand that when a market moves up on light volume, you really can't put a lot of stock into it. So you got to understand that you got to correct off that. Alright, here's the intraday chart of the NASDAQ. Again, around 130, you see the dramatic fall. We had a little bounce there and a roll down. Alright, folks, we're going to look at the day. We didn't do much day trading today. There were a lot of day trades, but we just didn't catch a lot. And you can see we came out with a couple negative small losses here. Didn't do much. Down a total of closed P&L of $186, $187 right here. However, our swing trades were the monsters, and QID we're holding. That's 2 times short ETF. The NASDAQ. And the NASDAQ was the stronger of the indexes, but we still picked up almost $300 here, $290. And our other swing trade, Blue, which looks to be getting some solid feet down here and getting ready to run, we were up $380. So overall, guys, we had a nice $400 day. I mean, that's what I love, is that you hold good swing trades and do good day trades, and you're going to have good days almost all the time, because when the market's not there to day trade, sometimes you can pick it up in swing trades. Alright, folks, so again, let's look at the QID chart here, and I want to show you why we look to get in this. Alright, you see this nice little bottom. This is where we entered right over here, and now you get this little pop-up, and we're looking for a target of this 20 moving average, which is 45.71 is target 1, and then target 2 to be 46.81, which is the 50 MA. Alright, so that's what we're looking for. We're looking for about 3 points in total off this play on QID as a swing trade, which would be $1,500 in profit, and you can't go wrong. And I personally think that we're going to get this in a couple days. Alright, folks, that's about it for today. There's not much to talk about swing trade-wise. Again, there were a lot of swing trades that we looked to play, and we just missed our entry. And I'm a big believer in not chasing, alright? You do not want to chase your entries. And those of you that want to be day traders out there, do not chase. The last thing I want to do before we go, folks, is just talk a little bit about the day trading chat room. You guys all should be on board by now. Anyone that's a day trader out there, having a group of people to work with that are amateurs, pros, middle ground, intermediate traders, it helps. Even me, I'm a pro day trader here, folks, and having everyone's eyes on the markets asking me about this or that makes me a better trader. So I encourage you all to come join us, even if it's for just to learn the learning experience. The swing trade alerts everyone should be on as well. We're up huge in these last 2 plays that we just gave out because of this turnaround, and it's just going to get better. Have a wonderful day, guys. We'll talk to you soon.